Hello and welcome to another live trading session. Today is August the 2nd, Friday. Not a pretty day, obviously, with what's going on in the market. We can take a quick look here. As we can see, market was down big yesterday, even bigger today. At the moment, we are down just a second. At the moment, 2.6 down, roughly. We're taking a beating, obviously, today, and I want to talk about that. We're gonna go in and try to salvage what we can and see how we prepare to go into the weekend, because we want to make sure that we can, survive the weekend. And as always, the primary goal is to, do no harm or preserve what we have to fight another day. So we want to make sure that we address that before we end the session today. Or we can always add some more trades later on because it's kind of early in the day. I don't know if you recall, but last time we had this. Last time we had a little pullback, I think here. What I've done is I stopped adding new trades when my metrics were hitting the certain threshold, and that worked fine. But this time I said a couple of weeks ago that I want to test how we can do it with going through the downturn with adding trade as per schedule and then combating the metrics by adding negative delta trades. And I think that probably in hindsight that was not the best idea. So I think the most important thing we can do with any of these pullbacks is take some learnings and adjust our strategy. So one of the things that I'll be doing for the adjustment is approaching these pullbacks differently, and then a simple rule will probably be not to be adding new trades as long as we have any negative delta trades on any hedges, semi-hedges, or anything like that. And that would probably slow down the decline, and we would be taking a little bit less of a beating. Obviously, on the other side of that, we would have less trades on. And so if the market returns, we would not be benefiting as much. But, we have to wait what's more important, losing less or making less, So there is a balance, and we have to look into that. But obviously, as you can see here, today is a pretty decent beat up day. And I just came back from work, so I missed first whatever hour or a couple hours of trading, and I wasn't able to close some of my trades in time. So let's go through what we have, and then, well, I started here doing the metrics right here. So let me just complete this before we go further. So minus 1613 for we just want to be able then later on to see how metrics looked like. And then the leverage was, well, that probably didn't change, 18.5, and then we didn't close any trades. So this is okay. So this is the current situation, current account and current metrics. So obviously our delta is way out of line, and then our buying power, it's pretty high for us because we normally stay well below 50. But generally speaking, it's not high. 52% is nothing. So we're not facing any danger with buying power or margin calls. But we are taking a beating, so we need to close some of the trades that are past our threshold. So let's look into that. To start off, we're going to start with naked puts, take some of them out, and then obviously the ones that are over 200%, and then we'll go from there. So liquidity might be an issue, so we have to be mindful of that. So this one here is 104. So this one for the moment is fine. And this is all we have in this expiration. And as you can see down here, we have some zebra trades. Let me do this. So we have a couple of zebra trades, and their main purpose here, you see this one is showing 500 profit, 740 profit. The main purpose of those trades is to lessen the blow. So if we miss our target of 200%, we have them to kind of compensate for that. And that's what we're going to do now, actually, with these trades. So let's go to the next expiration. And I know everybody is obviously panicking, and the market participants are panicking as well, which is what causes more sell-offs. But we never know when that's going to stop. And once the panic sets in, obviously it can continue down, but it could also find some temporary bottom at least. but I wouldn't be confident that anything is going to go back up at any point. So any movement to the upside, I would consider as just a temporary one, and wouldn't be treating it as a market return at this point. So let's take a look at the naked put 74. This one is fine. This one is not in danger yet. This one is 202. So that one is passed. But I think we have some worst ones that we're gonna address first. And this one here, let's see. Okay, 256. That's one of them. And then we have this one here, a real offender at 340. So let's close this position, full position. We might have to pay a little bit up because the liquidity might not be as strong. But okay, this one was fine. This one closed right away. So that's one of them out. Let's go to the next one. So which one is the worst one? The 289. Okay, so that's the one right here. 281. Okay, so we're gonna close the whole position. If you have any questions, you wanna jump in, just unmute yourself and let's do it. Now, as usual, we never know what the market is going to do, and maybe half an hour from now there might be a better opportunity to get out, but we're not going to do that. We don't take chances like that and try to predict what's going to happen. We're going to try and follow the plan. So let's up this a little bit. Looks like we're going to have to be chasing this one. Yeah, you see what a difference it makes that other trade just closed real quick. This one we have to work up our price. Well, let's do it. We have to close it. So all right, 136.5. So that's now two of them out. Let's see what else we have. Let me put let me put a rectangle just to make it a little bit easier. So what is this? 219. We have this one right here for 219. And we have this one here for 277. So let's go this. Okay, so obviously we also have some put debit spreads that we're going to be addressing and also trying to close some of those for a little bit of profit if we can. Let's try first at the regular price. Okay, we closed all of that. So let's see. So that's most of them out. And then we have, what did I do here? I closed 3 of them. Looks like there were 6 of them and I closed. Let's just check here. No, I closed 6 of these 51.50. Let me just see, 51.25. That's a different one. I'm sorry. Okay, so 267. So obviously we are hitting a bunch of losers now, and let's just do this one. So remember, okay, looks like it's okay. The market is moving up slightly, so that's why this one closed quickly. So let's just slow down now a little bit. Give a market a chance to, let's just see if while we're waiting for that, let's just see if there is any put debit spreads, or let me try and close one of these zebras. Let's do the one with a little bit more profit. Close position full. And so we're going to be selling it. Now that's some wide, there's a wide bid ask on this one. So we might have some hard time closing this. That might be a problem with zebras because if you have a short future, it's easy, it's quick, but on the other side, they're a little more dangerous. If the market reverses and starts going back up, then you are in trouble. So let's see, activity. Let's go a little bit down to it's not going. So price, let's see, replace. So we have 332 to 360. That's far, pretty far out. What we can do here is, well, let's leave it for now. See if it's gonna close. We're not gonna chase it at the moment further. Let's see what else can we do. We have some of the put debit spreads. Let's first see if there is, let's see, these are not in the money. So we have something here that that's a little bit in the money. Let's see what profit are we showing. 87, 70, nothing much there, 200. So here, maybe we wanna try and clip off a little bit here. So let's do a roll strike down. So this is the one right here. We're gonna go for 25. Now we don't want to do it here where we already have one. So let's just see. No, we don't. Let's see, what's this? This is 30 wide and we are getting 1175. That's not enough. We're not going to do that. Let's not do that. Let's see if there is anything worth closing. So this one, 83, 171. No. Let's see in the other expiration. Naked puts. So these are let's see, right here, 164, 150, 194. Let's see if we can shave off a little bit here of this one. Roll down the strikes down, and 75. We have again, we have the, I really don't want to be selling here and then creating a little bit of a nightmare for accounting. So yeah, so let's see. What is this one? Where is this one? This 455.25. So this one is 125 wide. So 125 wide would be 625 total value, and getting, let's see what we can, let's just see what would we get for the 56. So if you take the, let's call it 55 for this. So 55 divided by 125, which is the width, right? So that's 44%. So that's a bit early if we are closing the whole trade. We want to get a little bit more money. You remember 80 is a default if we're just if it's a hard sell-off and it's going through that. But we would like to collect a little bit more than that. So let's see. Let's leave that one. And what else we have here? We have 212 here. Well, we're gonna close that. I think there was one that's even worse than that. 200 and let me see, 199. No, so this one here. So let's go ahead and close this. Close the full position. And so when, what does it show here? Let me see. What did we do? This is a little bit of a mix. Let me just cancel this so we don't close something. Let's close all of this. let's go back to, gets a bit messy with so many trades on. Let's see, close position, pull. Yeah, okay. So, and then we go back to activity, replace. Now, obviously, it's not pleasant, but it has to be done. It's not pleasant to close losses, but we want to maintain. We're close to our 20% drawdown, which is we don't want to do more than 20%. And even that we reached, unfortunately, a little bit too fast. The sell-off was not that hard, and that's because we were a little bit over leveraged. But this is a good lesson. So going forward, we want to maintain a little bit less leverage, and that should help in a situation like this. And this situation should not happen more than 10-15% of the time, but it will happen. Our long-term projections are somewhere between 85 and 90, depending on the delta. 85-90% chance of profit, depending on the delta we chose, and we usually stay somewhere between somewhere around 10-12 delta. So we have to know that around 10-15% of the time we will get hit with losses, and we just have to be able to accept that. Let's see what market is in. Going slightly up. Let's see. 156 here and 140. So these are all, at the moment, they're fine. So we're not gonna go for them yet. There was one more somewhere, 199. That one is almost. And let's see. This is 100% loss, and then so nothing else at the moment. So what we're gonna do is go ahead and try again and close one of these zebras. Let's try the other one since we couldn't do the first one. Let's go close position. Now, if need be, we could separate them and just close the legs on their own, but then the market could move in a wrong direction and you get punished again. But sometimes if we have to do it, we have to do it. But let's see. Let's take a. I'm just trying to book a little bit of profit on these negative delta trades. Yeah. Looks like it's not going. Okay, so let's cancel this. And let's think about what we could do to maybe provide some relief over the weekend, given that it's Friday. And Elke is asking, why am I closing my zebras? Because I closed other positive delta positions. Yes, correct. So basically that's the reason, because I put them on as the market is going down, so they can start accumulating some profits in case the market continues down. And then when I close my naked puts, particularly if they're past the 200% point, if I couldn't close them like this time, I couldn't close them at 200 exactly, so I had to go a little bit over or a lot over 200. Then this would provide for that difference. It would cover that difference, and it would keep me more in line with the goal. But you have to be able to close them, and then the bid-ask spreads are so wide that it's getting hard. Market is now going slightly up, providing a little bit of relief. So we'll let that play out a little bit. But let's just talk about what we can do potentially. So obviously we could do a short-term hedge or something like a 14-day ES. Let's see, 14-day. If you go to trade, we could do that. Depending on what you're trying to do, protect your buying power, or what are you expecting? What are we defending against? I'm not too crazy about these 14-day hedges because the market would really have to pull back down strongly. So how about if we take a look at something like around 60 days, and then I think in our room, Anvil, Rob was talking about this trade where you basically just freeze the account depending on the size of the trade you put on. You freeze just for a couple of days in case the market goes down. You sell one naked put at the money, and then buy two puts for about the same amount. So about 80. So we would go down to where it costs 80, and we do quantity of 2. So that's basically break even when we put it on. But what the trade does is, we can take a look at the curve analysis and go here, and then just go to analysis. So that's the trade, and let's just close this. All right, so let's see if you bring it here. So this is just that trade in isolation, and what it does, we are right here now. So what it does is provides protection in case the market drops down hard, and then obviously there would be a huge loss if you wait until expiration and stay here. So the maximum loss is somewhere around 15,000, but we would never stay in this that long. The idea here is to just go over the weekend, and if nothing happens or the market goes a little bit up, you close it. However, there is likely to be some losses even if the market doesn't move. Unless there is an increase in volatility, there's likely to be decent sized losses here on Monday or Tuesday. So I'm not too keen on that. I would have to do a bit more research, but with the VIX at 28, that's pretty high. I wouldn't expect now a huge jump from here. There might be even some relief, and then that means we would be losing money on that one. So I'm not sure. I think I would rather close off our trades, try to collect some premium, positive premium from the zebras and put debit spreads, and then go from there. So for right now, how about if we go and just do this here in the trades, close these trades, show some losses here so we know where we at. I'm just going to do 1 or 2 here so that I don't keep it too long. And obviously, as predicted, the market will go up once we close our trades. But okay, we still have plenty of trades that would benefit from going up. So if the market continues to go up, we'll recoup some of that. But let's go and take a look at so what did we close here? I think we did this one, 123.25. I'll just want to show you one, and then we'll go from there. I'm sorry, which one we close? Let's do this one. 148. This was 52.50. October 18th, 52.50. October 18th, 52.50. So that's the one right here, and that one we closed for 52 for 148. So minus 128, and then this one. So as you can see, we're way past the 200 mark. But that's what happens sometimes. You can't close it in time. So this is where the zebra trade should help, or PDSs. But okay, I think I held you long enough here. Unless there is any questions, I'll call it a day, and then I'll continue to record all of these. Guys, have a fantastic rest of the day and the weekend, and I'll see you next week. Hopefully it'll be a better week next week.